right, so welcome everyone. Craig Shields here with 2GreenEnergy and our monthly webinar. I'm here with Sean Kravitz, the founder, correct?
Correct.
CEO of Esplanade Capital. I'm here in his beautiful office in the financial district in Boston on the 46th floor. I can't begin to describe the view looking out this window. In any case, Sean, welcome.
Thank you.
And Sean's going to take us through some material on the solar, especially the solar PV industry, the trends. I guess we could call this the past, present, and future with an emphasis on the future. So Sean, why don't you just give us a little introduction, maybe by way of background on yourself.
Well, delighted to join you today, Craig. I founded Esplanade Capital just over 13 years ago. We are a boutique investment management company based here in Boston. We manage two funds. They are, in fact, hedge funds, though personally I hate that phrase, but they are what they are. Our original fund, which essentially seeks to buy and invest in growth companies at value prices, as well as the second fund we launched almost 4 years ago now, Esplanade Capital Electron Partners, which focuses exclusively on solar-related securities, as well as securities that are impacted by the emergence of solar around the world. We have been investors in solar for about 9 years now, and so today both funds target investments in the solar sector.
Okay, so I'm curious to know, well, first of all, if we could just back up why you hate the word hedge fund. I would think, I mean, obviously, this whole industry has been through a lot, and there have been people lost money and so forth and so on. Having said that, the concept, as I understand it, is that generally the managing partner is smart enough to hedge the bets of the investors, thus minimizing risk.
That's certainly the theory. I think part of what I hate about the term is it is an incredibly broad term that is applied very narrowly, as if all hedge funds are the same color, flavor, size, shape, etc. And in fact, hedge fund is a legal structure, really very little else. It's a little bit like referring to mutual fund as a monolithic entity, when in fact some mutual funds are money market funds and some are aggressive growth technology funds. So that is the structure under which we operate and with the rules that govern them. But in fact, what it allows us to do is invest the way we deem appropriate, seeking to generate long-term capital appreciation.
Okay, terrific. And you also mentioned this relationship to the PV industry, in other words, the industry segments that are affected by it, but that are not directly connected to it?
We think that's very, very exciting. You know, when you talk about solar, even to someone who is quite knowledgeable about the sector, you know, this is not oil and gas. You know, while we would argue this is roughly a $100 billion global industry, in the scheme of things, that's really quite small. What is very exciting to us is how solar is starting to be the tail that is wagging the dog. And perhaps we can talk about this a bit more in depth later, but when you think about solar's impact on tangentially related industries, glass manufacturing, steel wire, it wasn't that long ago that polysilicon manufacturers weren't lumped in with the solar complex. They were really semiconductor businesses. But today, solar is what drives those businesses, not semis. And increasingly, with every passing day, particularly in a country like Germany, little old solar is starting to influence, spot electricity prices, local electricity markets. So solar is very dense in that regard, and its impact is becoming more and more far-reaching.
Okay. Interesting stuff. Now, I've looked through this presentation, and I noticed that we're going to get into a lot of the things that I think the common person, to which I lump myself, would be interested. In other words, everybody who follows renewable energy, even at a 50,000-foot level, is aware of the consolidation in this subject, the fact that it is growing and that it is an extremely important contributor to the grid mix overall over the long term, but it's currently, I think in the United States, right about 1%. We hope that it'll displace the dirtiest forms of fossil fuel generation, though obviously there are huge issues associated with that in terms of really moving the needle. So, but I know I notice that you get into where you see this thing trending and taking and moving us from a situation not too long ago where everybody said, wait a second, this isn't moving at all, to places where you have a reason for cautious optimism at very least.
No question. We think of it's an industry that really has to be built up market by market. And you could have benign neglect in a country as large as the United States, where solar, as you mentioned earlier, Craig, almost barely matters in terms of the overall electricity mix. But if we move to Germany, Germany has installed 7 to 8 gigawatts of solar each year for the past 3 years. That is, over 20 gigawatts of new solar installations in a market that really only has about 100 gigawatts in total. That is a profound impact on their energy mix. And as we see markets like the United States, notably California, of course, continue to grow quite rapidly, as that base goes from being, minuscule to merely tiny to now small, growing at 50-60+% actually starts to make a difference.
It does indeed.
And that's part of what gives us some optimism looking forward.
Okay. Now, I know, because I've seen this presentation, I know where you're going with this thing, but I do want to talk about Germany briefly if we can.
Sure.
So, because of all the radical factors, to use a word that may or may not apply perfectly, but in other words, factors that exist in Germany that exist nowhere else on the earth. So simultaneously, you had, Hermann Scheer, who did all this unbelievable work at both a political and economic level. He regrettably died a couple of years ago. You had, I presume, as a result of his work, a feed-in tariff of 65 euro cents a kilowatt hour, which enabled all manner of fantastic growth that's since been scaled way, way down. But then again, on top of that, you've got the reaction to Fukushima, where they're decommitting to nuclear. So you've got unbelievable level of vicissitude, I suppose you could say. So first of all, do you agree with what I just said, and where is this all going with respect to Germany?
I agree wholeheartedly, and I would say with Germany, it is winding down in a reasonably orderly fashion, but there's risk to that wind down. It's looking like a soft landing, but it could be a hard landing. The market just got too big. The feed-in tariffs were too generous for too long. It gave rise to a very well-oiled national industry that has largely since collapsed, at least on the manufacturing side. And there's been talk for about a corridor, about a 3 gigawatt plus or minus market that has been overshot for so long. We believe it is finally going to happen in 2013, where Germany will decline from roughly 8 to roughly 3 gigawatts plus or minus. But there is, while there is some upside to that number potentially, there's also a substantial amount of downside. And it would not shock us to see a true hard cap. And it would not shock us to see Germany as a 1, 2, or less than 3 gigawatt market at some time soon. A couple of years ago, that would have been an absolute disaster for the industry. We think that's finally baked in. And when combined with an Italian market that it hasn't come to a screeching halt, but is pretty darn close, the two largest markets in the world, people finally understand are, for lack of a better phrase, going away or being neutralized. And it is only now that the markets like the United States, like Japan, like China, and there are others, are big enough such that when they grow handsomely, as they've been doing, that can soak up this slack and, again, put solar on what is a much more sustainable long-term path to growth, because we're no longer reliable on unsustainable 8-gigawatt markets like Germany or, to a lesser extent, Italy.
Okay, interesting. Well, before we leave Germany, let me ask you this. I go to conferences where I frequently hear people talking about what is it like. These are finance forums, for instance, the Renewable Energy Finance Forum, sponsored, by the way, by some of the biggest law firms, environmental law firms on the planet. And it's not uncommon for people to say in those venues that the difference between Germany and the United States, among other things, is that well-oiled machine that you just talked about. In other words, here you have individual law firms and lawyers cranking up enormous bills to do an ad hoc project. There's really nothing ad hoc about it at all. In Germany, it's done in 10 minutes, and they don't need any lawyers, let alone a gaggle of them arguing about language. And this one guy said, I'll never forget this, I guess it was New York City last fall. This guy said, what you really have is, this is not about money, it's about lawyers billing and writing stuff that really is meaningless or that they know is wrong, so they're going to have more opportunity to argue about it. Now, in a venue where there were 400 or 500 people sponsored by a law firm, trust me, you could have heard a pin drop in that room. But I'm sure there was at least a grain of truth in what he said.
Oh, absolutely. Germany is a role model for any province, state, region, country seeking to establish a durable solar policy. Mm-hmm. The one big caveat is that it was just too generous.
Okay.
And if Germany had, started not at 65 euro cents, but 35 euro cents, and brought it down more aggressively over the years, consistently, mm-hmm. predictably, my sense is that as prices for solar have fallen, Germany could have remained a very, very robust market for years to come. But with too much too fast, now that whole program is imperiled.
Okay. Well, we'll see what happens there. So, Sean, why don't you take us through some of this? I will be very interested to ask you, fire a couple questions at you.
Well, today we'd like to talk about what we describe as a new dawn in solar investing. And I would encourage you to read the disclaimer, but the brief version of this is that this is not an offer or solicitation of the securities of any of the funds we manage here at Esplanade Capital. Any recommendations I may make as part of this presentation are purely our opinion, and any investment decisions that are made by anyone who should hear, read, or see this webinar should be exclusively at their own discretion.
Mm-hmm. And I guess I should say something on that, though I don't know exactly what. It was simply to say that I met Sean through a mutual friend, and I have the highest respect for him, but I also, I suppose I should say, don't, explicitly endorse what you're doing, because I don't know enough about it to know anything other than, I like the thinking that's gone into this.
Well said. Thank you.
Okay.
So it's just a bit of background. I should say that we started investing on solar, as I mentioned, about 9 years ago, which was on the eve of a real 7-year stage of hyper growth. Back in the late 90s and early part of the 2000s, solar was growing rapidly, but was so small it really didn't matter. In roughly 2004, at about the same time that we began investing in solar, we entered a true hyper-growth stage where the base was larger and the growth was almost 2x that, approximately 60% for that 7-year period. Recently, we've entered much more of a moderate growth stage. Again, very handsome growth. Most industries would kill to grow at roughly 15%.
Right. Let me just interrupt, though, and ask you, what am I not getting about this thing? Wouldn't one read the growth rate from the slope of this line?
Yes, but the numbers were so small that it was just too hard to see it.
Okay.
But this chart is not in log scale.
I was going to say, it's not a logarithmic scale, and because of that, I would think that thing about the slope of the line would be telling. But you're saying because these numbers are so small, the actual combined or compound annual growth rate of the thing is actually higher than it looks from here.
That's exactly right.
Okay, very good.
So today we are in the early stages of that more moderate, more sustainable growth path, and we believe that this has been paved by a short-term shakeout, and that's something we've been discussing here at the firm for quite some time, something we did a pretty good job of anticipating. This chart describes global solar revenue, and so this is the combination of not just megawatts and gigawatts installed, but the all-in price for those, which, as you know, has been falling. 2012, apart from during the financial collapse, 2012 was really the first down year this industry had experienced. That was a combination of growth of volume, but severe declines in prices. To put this in perspective, go ahead.
Well, I was going to ask, it's good to have you in this room, because now then you can see when I raise my finger like this, that means I want to ask something. But it's true that module prices have fallen from a couple bucks a watt to 56 cents a watt, but balance of system, in the installed price of solar hasn't fallen very much. Is that wrong?
Well, it depends on your start and end date. So there was a time when module prices were $4 a watt. So the most precipitous decline worldwide has been the module, period. But balance of systems costs have fallen as well. Not nearly as much, and whereas they used to be half of the all-in cost, now today they're becoming a larger percentage of the all-in cost. But balance of system costs have fallen in large part due to the experience curve. As markets become larger, they look more like Germany, so to speak, where it is a slightly better oiled machine, et cetera, et cetera. And that's why, in 2011, for example, there was about 24, 25 gigawatts of solar installed worldwide. People are still arguing about that final number. In 2012, we saw over 30% growth to, again, roughly 32. There are some people who think the number will be 29 or 30. Some think it'll be slightly more than 32. Let's call it 32. So it's a third increase in volumes, yet we saw a substantial decline in revenues. And, not surprisingly, 2012 was a brutal year for most people throughout the solar value chain. It was a brutal year for solar investors around the globe. We are coming out of that, and I'll speak to that later, but as we see modest growth in volumes in 2013, the pleasant surprise is not the growth in volumes, it's the stabilization in prices. And when prices are collapsing 20+% a year, it's nearly impossible to make money and to build thriving businesses. But when prices finally stabilize or decline at a tolerable, sustainable level, that's when an industry can regain a little bit of its promise and the hope for profitability.
Okay, well, let me ask you this. I guess certain people would be asking, what about grid parity? In other words, aren't we really playing a game here where as long as the levelized cost of energy for PV is a couple times that of coal, this is a kind of an unsustainable thing. Not that coal itself isn't unsustainable, but if you see what I'm saying. So aren't there people who say, look, the fact that there's a shakeout in this industry driven by precipitous decline in revenues and therefore deeply negative earnings, is regrettable for certain companies, but it's where the industry positively has to go.
Oh, we agree, and you rarely wish ill on certain operating companies, but that is part of how you get prices down, how you open up more markets, and the notion of grid parity is one market at a time around the world. That is happening, and it wouldn't happen if we had incredibly robust feed-in tariffs around the world. So that pain is actually long-term gain for the industry as more and more markets are opening up, and that is reducing the reliance on these generous subsidies around the world. So as subsidies really go away in places like Italy, the installations there will be because they are cost competitive with the alternatives. We're seeing more of that in Germany. We're seeing that in parts of the United States. And in the years to come, as subsidies continue to get ratcheted down in key markets around the world, solar will be installed because it's cost competitive. That's why we are excited about this 2014 ballpark, where prices are finally low enough that even with a much weaker Germany, Italy, etc., with the policies that exist, we can see a nice resumption of growth, in part due to emerging grid parity around the world.
Okay. Are you at all bitter? And I use that word advisedly because I consider myself at least slightly bitter, that this whole thing of subsidies, in other words, we do live in a world where we're bestowing tens of billions of dollars on the oil companies, and that doesn't seem to be going anywhere. For reasons that I could go into, but I don't want to take up time. But I get a lot of people listening to this are thinking to themselves, what's the matter with just getting rid of all subsidies for all of this stuff and creating a level playing field where the market can decide what it wants? Or what's the matter with starting to price in the externalities? In other words, I always say, if you want to burn coal, that's okay with me, as long as you pay for the long-term environmental damage, the lung damage, and so forth and so on. Coal won't look like a bargain, trust me,
Sure.
the moment you do that. So are you, to put the question back on the table, do you find yourself going, this thing with subsidies is actually kind of like bullcrap? In other words, if this thing could be handled a little bit better, a little bit more fairly, I wouldn't object to it, but the way it's playing out right now is unfair.
Oh, absolutely. If you price in carbon, if you really level the playing field that way, we don't need subsidies, by and large. The bottom line for us is, I'm reminded of a quote by Bill Belichick here of the New England Patriots. We do business the way business is done. Mm-hmm. So though we certainly have our opinions of what we'd like to see happen in different markets around the world with government policy, etc., the bottom line is that those decisions are done, they are made, they are implemented, and we work around that. And in that context, we hope for the best for solar.
Good. That's fair. I'll write that down. I was like that.
Yeah.
Bill Belichick. All right.
So the net result of this is that we believe a very familiar and we hope lucrative progression is starting to emerge. And here we present sort of a then and now. Mm-hmm. Then is a handful of years ago. We start with December of 2008, where at our firm we wrote a letter saying we've been contemplating a new fund dedicated to solar, that the economic crisis of 2008 has given us what we believe to be an exquisite entry point. Interesting. Perhaps a little bit prescient in retrospect. And in fact, you referenced this conference, and in March of 2009, literally at the bottom of global capital markets, coincidentally, I flew to Munich and gave a presentation at the Photon PV Investors Conference, where we just mentioned that we were planning to launch a new fund dedicated to solar that intended to be the world's premier private investment fund dedicated to solar and things impacted by its emergence. And thanks to the great efforts of central bankers around the world did not come to an end. And in fact, if you look at the Guggenheim Solar ETF, the quote-unquote TAN index, that returned about 90% in the subsequent 10 months. I think we'd all agree, a pretty handsome return on investment.
Well, you hit, I'm not an expert in this thing, but it seems to be March 2009. You probably hit pretty close to the bottom.
It certainly was. Now that is, a little bit of good timing, really luck. We did not launch our fund then and there, but we were in the planning and formative stages of it. I'll fast forward to today because, past is past, but future is what we're really talking about here. And we started to see a very similar pattern emerge. In our Q3 letter, we described the fact that we thought we were approaching a cyclical and secular bottom in solar industry economics as well as investor sentiment, and that even if we didn't get the timing quite right, we were onto something. Mm-hmm. More recently, we've been saying that we believe we are here and that it is in fact time. And in fact, December and January have proven to be extremely strong months in general for solar stocks. And we remain quite bullish about the opportunity looking forward. We're talking about months and months, if not years, not days and weeks. And then I'll talk about this a bit more in a few moments. This path is never linear. Solar stocks are volatile. Mm-hmm. They go crazy in one direction, they go crazy in the other, and they are not for the faint of heart. Mm-hmm. But we do believe that looking forward to the next many months, there is finally a sustainable, albeit turbulent rally that has begun to emerge, driven by both fundamentals and investor sentiment. And we think we're in the early stages of that turn. We had been thinking that the turning point would be somewhere in the first half of calendar 2013. And even we were a bit surprised when the stocks began to rise in December while business fundamentals continued to deteriorate, because our work is really fundamental in nature. We are traveling the world. We are in the factories and the warehouses in China and throughout Europe, California, wherever solar matters, to really try to put our fingers on the pulse of the industry and where the business economics are headed. And so we were skeptical of this market reaction. When solar stocks began to sort of pick their heads up very late in 2012, we said, wow, it seems early, business fundamentals are going the wrong way, and we know that things will still look very messy when these stocks bottom, but we think there might be more messiness than even that to come. So we were skeptical. It looked like it could be a head fake, and so we did not bet against it, but we were reluctant to bet on it. Yet, very shortly thereafter, we saw some decisive, some credible signs that business fundamentals were starting to, and this will sound silly, but get less bad. Not necessarily get good, get great, or even really get better, but get less awful, a little bit less bad. We continued to do our, very, very deep due diligence, and that has more or less consistently proven to us that these trends are persisting, and that in fact this turn is for real. So it started a bit early, but we think we're here. We think it's legitimate.
And I happen to know you're getting into, with this slide, the reasons, the underpinning reasons for precisely that.
Exactly. And this is not meant to be exhaustive, but we think there are 7 core areas, 7 signposts of what we're deeming solar sustainability, and I'll talk briefly about each one, but in a little bit more depth. But just as an overview, it starts with pricing, as I mentioned a few minutes ago, and we were seeing some firming of pricing throughout the supply chain. 2, the emergence of large new sources of demand. 3, a rationalization of supply in an industry that has been plagued by quote-unquote oversupply for years. 4, the surfacing of new and differentiated investment opportunities, which we believe will starting to become a meaningful driver of demand. 5, the de-escalation of tariff threats. This remains a massive uncertainty, but is becoming slightly less uncertain. 6, a capitulation or indifference, at the very least, from the investment community, and I'll talk about that. And last but not least, because we are value investors, despite the sex appeal of this industry, we are pretty boring value investors. We were seeing the persistence of really depressed valuations. Okay? And I'd like to talk about each of these in a little bit more detail to tell you both what we mean, the evidence thereof based on our proprietary analysis and research, a description of each, and a little bit of a stoplight summary as to where we saw things 3 to 6 months ago, plus or minus, and where we see things roughly today. And what I would say is that, by the time these stoplights are all green, it'll probably be too late. Because when the water is, nice and warm and calm and delightful, and all these stocks will have rallied sharply, and that's actually when you probably want to think about selling stocks, not just in this market, but in any market. So we like that inflection point from beet red to some yellow, traces of green, because we think that is the beginning of the turn that really matters. So first, just a minute or two on the firming of supply chain pricing, and it starts with polysilicon. Polysilicon prices stabilized and, in fact, have been rising. Polysilicon was really the last man standing, the largest single component in PV manufacturing, what had been a very tight oligopoly dominated by Wacker, Hemlock, Tokuyama, MEMC Electronics. The recent addition of GCL and OCI in China and South Korea, respectively, who've become two of the largest manufacturers in the world. Polysilicon prices finally took that one last leg down. Though they had collapsed from over $400 a kilo at the peak to roughly $50, even at $50, all of the major manufacturers were still generating very handsome profits. Well, for 2 years, we saw a continued grind down, and finally that stopped. And polysilicon prices that, again, depending on the data sets you look at, might have bottomed out at about $15 a kilo, are now gradually ticking up. They're not going down anymore. And while that could certainly change at any moment, it really validates the strength of downstream demand, typically coincides with stable to increasing downstream prices. And at the same time, module, cell, and wafer prices have been stable to slightly increasing, offering the potential for a little bit of margin expansion, smaller losses. And so supply chain pricing that 3 to 6 months ago, falling across the value chain literally every week without cessation, now we would put in the yellow to green light camp, and that's a huge plus.
Okay.
Next, the emergence of large new sources of demand, and we'll start with China. The new Chinese leadership has been discussing a 10 gigawatt goal for 2013 solar installations. That would be more solar than any country has ever installed in 1 year. Bigger than Germany, bigger than Italy ever was, etc. Now, that 10 gigawatt number is a nice round number and is highly uncertain. But if it's 8 or 9 or 10 or 11, that's a huge number that is effectively what we've been referring to for years as the China put. It is a huge market. Someone once described it as sort of a garbage disposal market, where you can just put in as much as you need to put in, and if you are a low-cost manufacturer, for example, a Chinese tier 1 like Yingli, that is the leader in China's sales at this moment in time, that can soak up an extraordinary amount of volume. And China, in and of itself, can bridge the gap of a declining Germany and Italy, and that's something that the global solar market just has not had.
Are you talking still about polysilicon, or are you talking
We are talking about demand at the module level.
Demand at the module level. So, but somebody has to install it. The fact that China's manufacturing it is fine, but if it's not getting installed, it's going to come.
Exactly, and we think China has a reasonable shot of installing somewhere in the neighborhood of 10 gigawatts this year.
What about their 12 5-year plan was published, I guess, last spring or something, last summer, which is all about this. It's multidimensional, but this is a big component of it. So is that the essence on which...
That is the foundation, and since then there have been sort of additional plans discussed and rumored, and they are, by and large, all to the upside.
Okay.
That's China. Japan's generous subsidy program is working. We are seeing Japan grow in arguably one of the most robust and predictable markets on earth now. India, South Africa, Chile, Australia are entering that gigawatt club, so that when they join the United States, which grew from roughly 2 gigawatts to 3.2 last year, when they join Japan, etc., you have a market that is no longer dominated by Germany and Italy and can resume a more thoughtful growth pattern. Mm-hmm. It's corroborated by Chinese Tier 1 manufacturers, Tier 1 and Tier 2, some of whom are talking about doubling shipments in 2013 over 2012. Mm-hmm. Now, that's not market growth. It is partly their market growth because they are selling disproportionately not to necessarily India, but rather to China, and it's market share gains. So very robust evidence. We talked about China. We talked about offsetting weakness in the EU, and we just see with every passing day that there's granular proof that end market demand is strengthening. Again, red and yellow becoming yellow. Mm-hmm. Rationalization of supply. This is what all the sell-side guys have been screaming about for, the past 10 years. There's too much supply, too much supply. The bottom line is that not a single publicly traded solar company in the world went bankrupt in the 2008-2009 downturn. Thankfully, that has changed. This capacity is starting to be rationalized. Chinese midstream producers, cell module manufacturers, have basically been halved from the 2011 peak.
In number.
That's less than 2 years. Mm-hmm. Almost 50 Chinese polysilicon manufacturers have been mothballed, have gone out of business, etc. We're down to 3. That's a profound change because those manufacturers could survive when poly was at $50 a kilo, mm-hmm. but at 15 they simply cannot. Mm-hmm. Again, a wonderful step forward. Western poly manufacturers, Hemlock we read about in the news, Wacker we read about in the news, mothballing, delaying very large capacity expansions in Tennessee, for example. Venture-backed darlings, Mia Soleil, Solyndra, gone.
Yes.
That is all part of this restructuring, rationalization process. We would argue red light becoming yellow.
Okay.
Surfacing new investment opportunities. Solar City made it public. It was not easy, but they made it, and the stock has been a home run since then. Enphase made it public last year. We see companies that might go public this year, whether it's Sunrun or Sungevity. Again, there's a downstream component here. Not seeing a lot of, midstream cell and module manufacturers going public anytime soon. We think that that's a very, very positive sign. SunPower early in January announced they had sold the world's largest solar project to Warren Buffett's Mid-American Energy, a 579 megawatt project in Antelope Valley in California. Again, this is not Warren Buffett buying solar stocks. Mm-hmm. This is substantiating the appetite for these power plants. Yes. These are real businesses.
May I ask
Sure.
a question, though? When you mention Solar City, I think of distributed generation, which
yes.
is obviously is the thing on which they hang their hat. And that reminds me of what I think to be a very interesting, maybe not short term, I don't think it's going to affect anything in 2013, but I do think that the way the United States, for instance, regulates utilities, we have Byzantine rules that are, I presume, developed over the last century plus, the last 125
Sure.
years, on a region-by-region basis that currently don't provide much incentive for things like smart grid, integration
Sure.
of renewables, so forth and so on. But we also have this thing with distributed generation, which I think could look pretty interesting and pretty important here in the United States. And you're the expert on this thing, but do you see that as this kind of new, a kind of rethinking of where we're going vis-a-vis energy at not only the residential but the commercial and industrial level?
Oh, there is radical change, and radical change is not usually a good fit with archaic systems and policies. And unfortunately, though there's immense opportunity if and when things are brought up to date, that introduces massive risk, and we can see real risk for some of these downstream companies, whether it's a Solar City, a Sunrun, et cetera. If there are meaningful changes to net metering in key markets, all of a sudden that business model can be turned on its head. So we are vigilant about monitoring risks as well as opportunities as these real breakthrough companies that are really changing the game are trying to navigate an archaic system.
Yes, I see this for whatever. Normally I'm the pessimist here, but I see this as much more opportunity than risk. In other words, yes, things can get worse with vis-a-vis things like net metering and so forth, but I don't see that happening. I think as we start to realize, as people start to realize where we're going with respect to the environmental catastrophe wreaking on this planet, I think there's going to be more pressure on the upside of things like solar than the downside. It seems that way to me.
Well, let's hope so. My job is to be a pessimist.
Yes.
So, in general, if I have to bet, I'll take the other side. But I think there is good reason to be optimistic as well. And on that front, we could be, nearing the eve of some dramatic and sweeping changes which will enable more low-cost capital, specifically in this country. Things like REITs, securitizations, maybe even MLPs for solar projects.
Yes.
And again, it's early, but if you think about the vast community of investors who are so hungry for yield, so sick of a 2% T-bill yield, who have flocked to MLPs, taking on much more risk than I think they realize, you may one day have the opportunity to do that in solar, and we certainly hope we will.
Yes, that's master limited partnerships.
Moving to tariff threats. U.S. imposed tariffs on Chinese solar modules. That has led to minimal disruption. Pretty good case study. Admittedly, the U.S. is a very, very small market, less than 10% of global solar demand. We are expecting some sort of announcement of preliminary tariffs from China against polysilicon manufacturers. That was expected potentially on February 20th. It's been delayed. An optimist would say that China is negotiating with the EU to try to avoid a full-blown trade war, because on the other side, the European Commission is working on tariffs on Chinese modules, something that would be a lot stiffer than the U.S., for example, because Europe is such a large market for Chinese solar modules. This is, if not the biggest single risk, certainly a massive one. We think it's gone from red to red-yellow. If and when there's a positive resolution, a grand bargain, it will be a watershed day for this industry. We are not expecting that. We are expecting real pain. But again, because of China's emergence, because of the U.S., Japan, the U.K., and other markets, this is not a deal killer in our view.
It's very interesting.
And the investment community has largely either become indifferent or capitulated. We can't tell you how many sell-side analysts have been fired. They've been redeployed to technology. Portfolio managers we used to travel around the world with don't even look at solar today. Maybe it's too small in terms of market cap. Maybe they lost too much money. They have moved on. And momentum is a dangerous thing. When things are going to the sky, everyone buys. When things are barreling towards zero, people just assume that trade will continue. Those are the same people who were quote-unquote geniuses being short First Solar from $200 a share down to $11. But in fact, a little bit of a turn, and all of a sudden First Solar has tripled. So the momentum trade is not necessarily alive and well anymore, and that can create very exciting things when you anticipate a turn. When you do your own work, you can start to see opportunities when people have given up, and we think people gave up. And last but not least, on the 7 here, it's the persistence of depressed valuations. We see companies that are trading at large discounts to true replacement value of net assets, not book value, not tangible book value, but true replacement value. Now, a reasonable person might say, well, these assets don't make any money. Why would anyone want to replace them? I respect that point of view, but we are seeing companies that are finally trading at very low multiples of what we think they can start to earn again someday. Again, not tomorrow, but for some later this year, for others in 2014, where expectations are of no growth, no earnings, no cash flow, no hope, and we are starting to see, again, on a one security at a time basis, opportunities for companies who will become profitable again, who would be valuable to an acquirer, et cetera, and we absolutely love that.
Right. Let me ask you this, going back to Esplanade. So the hedge fund, or the Electron Partners version of this, has holdings that include a varying componentry of what you've just described, plus, I presume, cash equivalents and so forth and so on, or is it all in international equities, or what is it?
It changes all the time, but we are investors in international equities. We also own convertible bonds from time to time. We are also short selected equities and bonds. We also employ options, and last but not least, we have historically always had an extraordinary amount of cash for dry powder and opportunities that might arise. So today, and in recent months, we have covered a number of our shorts, thinking that the damage has been done. We have started to bolster selected positions that we owned throughout some of the pain and carnage. And in fact, we've added some new positions that have finally hit our price targets, where we say, for the patient investor, we think they have the opportunity to make a lot of money. Because solar stocks are so volatile, that portfolio can shift quite meaningfully from month to month. But today we continue to build a portfolio that is consistent with this view of the world that we're feeling terrific about.
Very good.
And to that end, this is purely illustrative and is not meant to look to the future. And I should add a disclaimer, which is, I know I've mentioned a few stocks, and it is possible that we have or have had a position in some of these stocks, long or short, and that those can change at any time. Part of why we started to get so excited is we looked a few months ago and realized that the TAN index, again, the Guggenheim Solar Index, could rebound 200%. At the time, it was 300%, and would merely return to the levels at which the stock market, bottomed in 2009, March of 2009. Now, the stock market has obviously gone much higher, but these stocks could double or triple or quadruple and merely get back to where they were at the stock market lows. That is not a reason to invest in solar stocks, but as you look at a wide variety of emerging evidence, when stocks can double or triple or quadruple and merely get back to stock market lows, that's awfully interesting. And so just in summary, we would say that we believe a number of these critical signposts are starting to turn from red lights to green. We want to reiterate vociferously that there always have been and always will be bumps in the road, that these moves are never linear, and that investing in solar stocks is not for the faint of heart. The market has almost begrudgingly begun to accept that this turn is happening in our view, but investors remain quite skeptical, and we love that. because we still think that means we're quite early. And in fact, we believe that a new dawn in solar investing has arrived.
Fantastic. Sean, this has been wonderful. I've learned a lot. I'm sure the listeners have as well. I thank you very much for spending the time with me here.
Pleasure to be here with you.
Anybody interested in contacting Sean through me can just hit the contact button on the website, or you can find Esplanade Capital online. Very good. Thanks again, my friend.
Thank you.
Okay.